Good morning, everyone. On behalf of Vetiva Capital Management and our media partners, to welcome. Sorry, sorry, we had technical issues. Good morning, everyone. On behalf of Vetiva Capital and our media partners at Frontier Africa Reports, good morning, everyone. On behalf of Vetiva Capital and our media partners at Frontier Africa Reports, we would like to welcome you all to our breakfast meeting today. Sorry for the technical issues we had early on. Please note that this meeting is set to last for 30 minutes inclusive of Q&A. It is being broadcast live on our Vetiva online page on Facebook and is being recorded. The audio file may be shared with third parties. On our agenda today, we'll get a rundown of the fixed income and equities markets with their outlooks for today from our traders, Sheung and Morige, after which we will move to our media partners, Frontier Africa Reports, for their own Pan-Africa updates. We will now start off with Sheung and the equity space. Good morning, Sheung.
Good morning, Chidoze, and good morning, everyone. We start off with performance of two markets in West Africa in the last trading session. In BRVM, as expected, and like we mentioned in our last meeting, the market sustained positive run with a 42 bips day on day return. Though market breadth closed lower with 11 gainers and 18 losers, most of the advancers were high cap stocks. SMB, Cote d'Ivoire, and CITAB led the gainers chart in the market, though on lower volume. The gain moderated the year-to-date loss to negative 0.72%, and we believe going into today and the new week, we foresee a mixed market as investors might likely take profit on recent gains, while we believe there's still room for price appreciation on some names in that market. So moving to Ghana, the market reversed the 14 bips gain we saw in the previous session as the index lost by the same 14 bips. Gains in Fan Milk and Enterprise Group weren't sufficient to tilt the market to a positive close, following a 9.90 loss in the share price of Unilever Ghana. Fan Milk also recorded the highest volume in that session. It was a generally quiet session as we didn't see the usual large trades in MTN Ghana and Cowbank, which dominated the market in earlier sessions in the week. The loss moderated the year-to-date of the market to just 18.55 positive. We expect a positive read, though profit taking cannot be overruled, as investors will watch out for more corporate actions from listed companies. If you remember last week, we saw Cowbank largely demanded on the back of the dividend payout on back of the dividend that was declared by the company. So we believe any more dividend or decent corporate action should also affect any stock that has some declaration in that space. Moving to Nigeria, the week ended on a positive note as investors cherry-picked on some beaten down names with decent valuation. We saw the 61 bips positive flows in the session was largely on the back of a 233 bips gain in Dansem, which was supported by 139 and 221 bips gain in GTB and in UBA. We saw Interbreak continued on its negative daily return, losing another 90 bips, and was joined by Access and Zenith in the banking space. Well, but the losses weren't strong enough to pull the market in that session. For sectoral performance in the session, this was largely positive as four sectors closed in the green, save for the banks, which dropped 52 bips, largely due to losses in Access Bank, as it was marked down for dividend, as well as we also saw losses in we also saw loss in Zenith Bank in that session. Industrial subsector led the gainers with 119 bips green close as Dansem improved in the session from the 115 naira levels we've seen. Dansem close to 120 in that session. Recent down and value improving 37%. The banking sector dominated trades, accounting for 70% of market turnover, and we've continued to see this pattern play out with the banking sector being the liquid being the sector in the market. Looking at the weekly performance for last week, the ASI closed 15 basis point down following days of negative close that we experienced earlier in the week. So the positive close on Friday could not push the market to a positive week-on-week close. So for our outlook for today and going into the week, we expect market to be largely driven by Q1 earnings release as investors look out for catalysts to spur buy sentiment. We also believe with some names looking attractive following sell-offs earlier last week, investors will stagger their purchase into these new names that have decent valuation. And lastly, with more dividend payments coming in and with the FX challenge biting harder, and preventing mostly FPIs from repatriating funds, and with limited option, we see this dividend being reinvested into same names, thereby driving some big sentiment. So those are the outlook for the week, and those are the things we believe will drive our outlook. That will be all for the equities market. Do have a profitable week ahead. Thank you.
Thank you, Sean. We will now move to Omorige for fixed income and currencies. Good morning, Omorige.
Good morning, Chidozie. Good morning, everybody. I'll kick off with the money market. So the money market is still very liquid. However, we witnessed a marginal improvement in system liquidity on Friday. Opening liquidity figure on Friday was around 69 billion positive, coming from the 72 billion negative that was recorded on Thursday. The increased funding need on the back of the FS retail auction, which held on Friday, as players had to make provisions for the FS retail auction debit, drove money market rate higher by over 100 basis points to trade around 25% levels from the 14% levels recorded on Thursday. So our expectation for today is that money market will trade at lower levels as the funding pressure reduces. Moving on to the FS market, the parallel market remains stable on Friday to trade around 482 naira to $1, while the in window trade at a high of 437.62 naira to $1. The significant decline in I&E industry turnover drove I&E rates to 411.13 naira to $1, which is a 50 kobo drop from what was recorded on Thursday. So I&E industry turnover decreased significantly to $61.5 million on Friday from 116.16 million recorded on Thursday. Our expectation is that the Naira will continue to hover around those levels, barring any significant inflow of FS into the system. Moving on to the Treasury-based markets, as expected, the T-based market closed last week on a very active note. We saw sell-off across the benchmark of the maturity that enjoyed the most action on Friday was the newly issued one-year paper. Trades on that one-year paper were consummated between 8.7% levels to 8.8% levels. We also saw some players try to offload their OMO positions at sub 9% levels, but there was really no significant demand on that end, given that NTBs are currently trading at similar levels in the market. Overall, there was a lot of offers seen across the benchmark curve for both the NTB and OMO segments. However, trade consummated were majorly on the long end of the NTB spectrum. So our expectation for today is that the market will trade actively as players continue to offload their NTB positions with the hope of getting higher rates at subsequent auctions. I'll conclude with the bonds market. The bonds market closed last week on a very active note also. We saw interest on the short and long dated maturities, especially on the 2023 and the 2045 maturities. We saw a slight moderation in the bearish sentiment, given the improved system liquidity on Friday. As a result, offers on the 2045 maturity moderated to trade around 13.77% levels from the highs of above 14% levels recorded in previous trading sessions. So our expectation for today is that the bonds market will trade actively as players take strategic positions ahead of the bonds auction that is happening this week. That concludes the presentation for fixed income. Thank you very much.
Thank you, Amorie. We will now move to Chima, a consumer goods analyst, who will talk about Unilever's Q1 21 earnings. Good morning, Chima.
Good morning, Chidozie. Good morning, everyone. So like Shil mentioned earlier on expecting Q1 releases from many of these firms. The first from our coverage is Unilever Nigeria. So on Friday, I think they released their Q1 21 earnings, and we saw that very interesting to note, we saw that the company reported a loss after tax of about $500 million. So this is interesting to see because we know that we had come to expect that their Q1 results would be is normally their most profitable results. Going back, I think 14 years, they've always turned a profit in their Q1, even in 2020 when they were still dealing with the receivables problem. So for starting from the top, we saw that revenue grew 46% year on year to 19.4 billion naira. So last year in June, when management had held a call with analysts, they spoke on introducing a lot of some other products into the value market of the HPC segment. And that is what they did last year. So we saw that they introduced a smaller SKU for its Pepsodent toothpaste. We saw two other new SKUs for its Sunlight dishwashing liquid brands, and then they made that multi-purpose. Then they also introduced, in the food segment, they introduced a smaller SKU for, I think we mentioned this earlier, for its Knorr cubes, and finally they introduced a new range of seasoning powder products. So because of this, we saw that both the food and HPC segments for Unilever grew about 40 and 50% and 53% year on year respectively. So although we saw that revenue grew by such a significant percentage, we saw margins in total shrink. First, we looked at gross margins. For gross margin in Q1 2021, their gross margin came in at 23%, which is a 3% decline from the margin they reported in Q1 20. Also, we looked at their 5-year average for Q1, and gross margin over that period has averaged 28%, which when compared to 23%, like I earlier mentioned, makes the decline a bit more significant. So we can explain the gross margin weakening in terms of the increased cost of production. So although Unilever is able to source most of its packaging materials locally, of which that is also would have been affected by inflation. We know that a lot of its other raw materials, a significant portion of its raw materials are imported from international markets. And so with the FX challenge that has plagued the markets from 2020, we saw that weaken gross margins. So moving on to operating margins, this also weakened as well. This is because we saw a 58% year-on-year jump in OPEX to about 4.6 billion naira. So this caused the company to report an operating loss of 200 million naira, with OPEX margin, or with operating margin rather, declining to 1%, to minus 1%. So in total, we saw that profit or loss after tax came in at about 492 million, which is almost $500 million naira. And this was further exacerbated by the fact that although they had a negative PBT of about 13 million naira, they still recognized a tax expense of 382 million naira. That is also in addition to the minimum tax expense that is required. So total loss after tax came in at almost 500 million naira. Moving on, in terms of efficiency, we can see that it was able to, so one other significant thing for us to note is that the company did not recognize any impairments. So we know that the company had been suffering from receivables collection challenges and had, taken a lot of impairment losses on its receivables. For context, we know that for the audited results in 2020, impairment losses came to about 3.8 billion naira. So it is significant for us to note that in Q1 there was no impairment charge. And to further buttress this point, we looked at the receivables turnover ratio, and we saw that it had improved from about 0.97 times to 1.4 times in the period. Means that they are now collecting their receivables a bit faster. So we'll move on to our outlook for Unilever. So we had mentioned earlier that the company introduced a lot more SKUs into the market. And so that's what we expect to guide our projections for revenue in the following quarters of the year. But we'll still break down the projections into Q2 and H2. So Q2, we expect a slightly higher revenue growth than the rest of H2. This is because if we look at Q1 20 performance, there was still a low base. So when we're comparing the revenue growth for our expectations for Q2 21, we expect slightly higher revenue growth because Q2 20 was a low base. However, as we progress into H2 21, we can see that the low base effect would wane. So we'll just rely on the increased volume rollouts, as well as the expectation that we'll see increased economic growth in that period. Another important factor to note is the separation of Unilever Nigeria's tea business. So around early 2020, the Unilever Group announced a strategic review, the conclusion of its strategic review of its tea business, and that the conclusion was that they were going to be separating its tea business from the group, although that would exclude the tea businesses from India and Indonesia because those were well performing. So based on that, by the end of this year, 2021, we're expecting that the tea business for Nigeria the Nigerian business will be spun off, although it would be set off into a separate tea company that would still be under a separate tea holding company managed by the group. So based on this, we have put this into our consideration because we know that while we don't know the full extent of the losses from the tea business, we know that revenue from Nigerian tea business contributes about 14%, about 13.8% to be precise, to revenue. So we factor that into our outer year forecast and would factor that into our PAT and our target price. So I think that is all we have for Unilever today. We will be sending out our notes as soon as possible with a lot more details on that. Thank you.
Thank you, Chima. We will now conclude with Temple from Frontier Africa Reports. Good morning, Temple.
Good morning. Good morning, everyone. We'll take off from the eastern part of Africa, where Kenya and Canada signed an MOU on bilateral trade and investments over the weekend. It's a 3-year MOU, and it was signed directly through KEPSA, the Kenya Private Sector Alliance. And we expect the first engagements to take place sometimes in May. Virtually, actually. Then today we do expect a US Exim Bank Africa trade webinar to happen, something that a lot of investors across Africa are expected to join. In Uganda, you've got the statistics office there rebasing the consumer price index, and they then thereafter released a data for the month of March, which came in at 3.4%. And to other parts of Africa, where you have Southern Africa, higher fuel prices in Botswana has been driving up inflation. Inflation for the month of March was up by 3.2% year on year compared to 2.4% in February. And that is because they had increased the price of fuel on March the 1st. So that's impacted the inflation data over there. Namibia's inflation also came in higher at 3.1% for the month of March, compared to 2.7% in the month of February. ESCOM in South Africa has got two largest workers' union demanding a 15% wage hike by May 4th specifically. The two unions are the National Steel Workers Union of South Africa and the National Union of Miners. They are backing the staff of ESCOM to ensure they get this. They had lodged their complaint on Friday. The wage negotiation is expected to resume on May the 4th. And you all recall that ESCOM has been recording losses in recent time and have been unable to meet the demand for electricity in South Africa. So this whole demand now adds more woes to the troubled company, as it were. Ghana has got Airtel Tigo assets, and the whole takeover plans now concluded from Bati Airtel. So all of the agreement basically is to have all customers transferred, and of course assets and liabilities all transferred to the government of Ghana. They will find a way to sort that out. Everything belonging to Airtel Tigo now goes to the government of Ghana. So we hope that they will release more details about how that will pan out eventually. But we understand that the takeover process is done already and concluded. For the northern part of Africa, just a couple of corporate stories. You have Abu Dhabi Commercial Bank getting offers to sell its stake in Alexandria NMC, and then in Morocco, Sound Energy, Africa Gas, both partner to offtake and a liquefied natural gas project, LNG project in that country. We'll wait to see how all of that transpire eventually. These are our headlines for this Monday morning. Thank you for listening.
Thank you, Temple. We have now come to the question and answer portion of the meeting. If you do have a question and would like to speak, you can raise your hand and you will be given an opportunity to speak, or you may use the chat box function. I see we have a question from Godwin, and his question is, I want some clarity on the impact of the planned ban of white sugar importation by CBN on Dang sugar. Is it positive or negative? Thank you for your question, Godwin. Chima will now treat it.
Thank you very much, Godwin, for the question. So first of all, Dang Sugar is currently one of the investors under the backward integration program. So it's currently looking to boost its local sugar production. However, it still falls short. Local production still falls short of the total sugar production needs by the firm. I think it currently produces about less than 10% of its total output locally. But it's also important to note that it's not only Dangote Sugar that would be impacted by this ban. The other sugar players as well would also be impacted by the ban. So to answer your question directly, I don't think it will be a positive one for the company because they still rely, for all the companies, because they still rely on importation of raw sugar. So it would then depend on when the extent of the impacts of negative impacts will then depend on when the CBN actually puts this ban in place, because by next year, Dangote's capacity for the backward integration program should increase. I don't have the exact figure now, but it should increase substantially. So that would also mitigate the impact. Another thing that will set the impact apart in terms of how it affects each player differently is their ability to manage their FX challenges. So I hope that answers your question. Thank you.
Thank you, Chima. I see we have another question from Shehu, and it says, to the economist, what should we expect as the impact of the potential wheat ban on food inflation? Moshe will now treat your question. Moshe, you may now speak. Thank you.
Good morning, Chidozie. Good morning, everyone. And Sean, thanks for your question. Clearly, it will have a negative impact on food inflation. Chima has already said it. There's still a gap. Domestic production of sugar. So restricting access to FX for sugar importers would have two implications. They'll probably have to go to the parallel market to source for FX to import. And clearly we know the parallel market rate is a lot higher than what you central bank or better domestic production that we have. Prices or their costs would have to go up, all of which feeds into food inflation at the end of the day. So the impact can be positive in the near term, and it also depends on how quickly we're also able to shore up our domestic production. And so we're able to do that, we'll probably not see any deceleration in food inflation. Hope that answers your question, Sean.
Thank you, Moshe.
Yes, thank you.
If there are no further, okay, I see we have another question, and it's okay. Sorry about that. The person has lowered. Okay, we will now take one more question from Adewumi. Adewumi, I will ask you to unmute your mic, and then you can go ahead and ask your question.
Hello, good morning. Thank you again. I just want to ask one thing. With all that's going on right now, inflationary pressure and challenge with FX, on the macro scene, is it evident to say that the central bank has sort of shown its hand and says we are mainly going to focus on defending the naira as against trying to control inflation and interest rates? And if so, I mean, what do you think the end game is? And do you think they're going in the right direction considering the inflationary pressures and the interest rate environment we find ourselves.
Okay, thanks for your question. I'm sorry I didn't get your name. Clearly inflation has always been at least in recent through the recent crisis, inflation has taken like the back seat when it comes to central bank decision making. They've been more focused on stimulating growth and then defending the naira. For me, it really can't end well, to be honest, because you can't downplay the impact of inflation on investments, on cost of living and all that. So yeah, most likely the gains you probably record by through maybe an aggressive growth drive like we're saying will probably be muted, if not completely like eroded by inflationary pressure in the near term. Yes, you may see improved credit growth and all, but the cost of everything else is going up. So credit may be increasing, but investment returns is reducing the cost of inflation and all that. So at the end of the day, it's probably a zero-sum game if you'd ask me. It's probably a zero-sum game if you ask me, except the central bank now starts focusing on inflation again. That would obviously require tightening in monetary policy and which would be contrary to their growth drive. But at current pace, if things don't change, we're probably not likely to see much of an impact on the economy in the investment space if we continue to downplay the inflationary pressure that has already built up. I hope that answers your question.
Yes, thank you.
Thank you, everyone. We would like to thank everyone for the questions today. We have now come to the conclusion of our meeting, but before we close, an announcement. Tomorrow, the team lead for the equity research at Vetiva Capital, Luke Ofedribe, will be talking about the 2021 outlook for MTN Nigeria. On behalf of Vetiva and our media partners at Frontier Africa Reports, we would like to thank everyone for joining us today. We encourage everyone to keep safe, and we look forward to having you join us again tomorrow at 8:30. We hope everyone has a good day. Goodbye.